Hi, my name is Darren Joseph from HJ.tax, and today I want to talk about FTX, the Caribbean offshore sector, and the threat of Dubai. For those who don't know, HJ.tax, we are a team of cross-border tax professionals that seek to demystify the sometimes confusing world of offshore banking, cross-border taxation, and international compliance in general. Have a look at our website, HJ.tax. We have over 2,000 articles that are completely free of charge that take a dive into some of the key concepts and principles that you need to keep in mind as you navigate, as well as our YouTube and podcast channels. We have over 1,000 videos that do the same as well. We have interesting interviews with whom we consider to be thought leaders in the space. So again, HJ.tax. My name is Darren. So yeah, it's been a busy time. It's been a busy last few months, and I'm recording this in January 2023. So just at the start of what we hope to be a more stable year than 2022. But it's been particularly tough on the Caribbean. Why do I say that? We have FTX, which was a huge news story in Q3, Q4 last year. And understand that it's not the first time that this negativity, and of course, FTX being based in the Bahamas, there's a lot of negativity in terms of the press coverage of the Bahamas in particular and the Caribbean by extension. And unfortunately, it's not the first time. I mean, we had the Panama Papers back in April 2016, Pandora in October 2021, I think it was, Paradise November 2017, Paradise Papers. So all these offshore leaks, again, to be fair, a lot of what was disclosed wasn't technically illegal. And as far as I'm aware, and as far as anybody is aware, of course, everything is still under investigation, but there's no suggestion of wrongdoing on the part of the Bahamas or any other Caribbean jurisdiction yet. The way the entire thing is being portrayed in the media, there is a bit of a negative tinge towards that. And it's unhelpful. It definitely is unhelpful in a space that is at a huge reputational risk. It is deep. It is a malaise that is quite deep. Unfortunately, you have unscrupulous, and again, there's no hint of illegality or any sort of, as far as we're aware, there's nothing illegal on the part of any jurisdiction. But unfortunately, you have promoters in the space, and they're definitely in the minority. I don't have any statistically valid data, but I would imagine that they are in the minority. The vast majority of promoters, professionals, fiduciaries in the space, above board, completely compliant, trying to do the right thing. But unfortunately, you have this minority of promoters who they can't even, I listened to some of the videos and podcasts, they could not find certain Caribbean jurisdictions on a map. They can't even pronounce the islands, the names of the islands correctly. It's St. Lucia, not St. Lucia. It's Dominica, it's Grenada, not Grenada, stuff like that. So they're completely unfamiliar with the jurisdictions. And unfortunately, they may misrepresent what is the right thing to do. I don't want to cast aspersions on anyone, but sometimes, perhaps through no fault of their own, they're perhaps not properly trained or qualified, but, things happen. So where are we right now? Banking has become increasingly difficult as a result of the reputational risk and the consequent de-risking. So you had a situation in the past couple of decades, particularly where in the English-speaking Caribbean in particular, which is where I'm really focusing. Of course, the Caribbean is quite diverse. You have the Dutch-speaking, you have the Spanish-speaking Caribbean, and you have the English-speaking Caribbean. So the English-speaking Caribbean, to some extent, and in some ways becomes synonymous with the offshore sector. And we've had a situation where most of the banks were Canadian owned and controlled, and they're pulling out. We've had BNS, Bank of Nova Scotia, sometimes known as Scotiabank. We've had CIBC, Canadian Imperial Bank of Commerce, or Bank of Commerce, depending on which island you're looking at, and Royal Bank, otherwise known as Royal Bank of Canada, and they've effectively pulled out of a number of jurisdictions because the compliance burden and the cost and the risk of doing business has just become progressively more difficult. And as you know, in the offshore sector, it's kind of like it's a pairing. I don't want to draw any metaphors with food to make light of the situation, but that's what it is. You need to, when you're creating structures, a lot of the times you need to be considering this is where the entity is going to be, but I also need banking to pair with it. And it's becoming increasingly difficult to bank in jurisdictions where there's no substance, where there's no entity, there's no incorporation or whatever. And the fact that domestically, within the Caribbean, certain Caribbean islands, not all of them, banks are pulling out has become unhelpful in that it renders the structure potentially unworkable, depending on what you're trying to do with it. And then, of course, you have the blacklist. There's a blacklist and the graylist from the EU, for the European Council. That one in particular, there are a number of lists, but I'm talking about the one from the European Council. And still, we have and this is pre-COVID, not pre-COVID, pre-FTX. Well, actually, probably it kind of overlaps. But anyway, the Bahamas confirmed, this is last October, as of last October, the list printed last October. The Bahamas is on it, the US Virgin Islands, Trinidad and Tobago, Turks and Caicos, Panama. Yeah, so it just, again, it doesn't necessarily imply that the authorities there are doing the wrong thing. That's to me, that's not what it's about. But to the layperson, it does create a negative connotation. And of course, there are consequences to being on the blacklist in terms of working with entities in certain jurisdictions, particularly in Europe. So the whole situation has become, to some extent, alarming, without meaning to cry wolf unnecessarily. We have a situation where the offshore sector is evolving, and some people say onshore is the new offshore, but the point is that things like economic substance, are becoming the rule rather than the exception. The idea of setting up shell companies, like in some spy movie, those are quickly being outdated. That's an outdated way of thinking. And if it is that shell companies are no longer a thing, and you're setting up companies in jurisdictions where you have boots on the ground, where you have some sort of meaningful connection, in principle, that whole shift in the industry is putting the Caribbean at a further disadvantage, because at the end of the day, these are tiny islands. So all things being equal, the talent pool is not that deep. So the skill sets and so on there, they don't sit there, they sit in other jurisdictions. So what does that mean? What are the implications of all this? Enter jurisdictions like Dubai. Dubai, as I've spoken about in many other videos, has become increasingly competitive. And most importantly, they've made decisive steps to get off and hopefully stay off the blacklist, and part and parcel of that would be the imposition of economic substance rules, that 9% corporate tax, and further taxes to come. But the point is that they're coming in line with international norms. And it's relatively big compared to the Caribbean. So the talent pool and the talent deficit isn't what it would be on a tiny island. There's a lot of land. There's, so much desert to be reclaimed and so on. So I think to some extent, those in the offshore sector in the Caribbean, they face, it's not rocket science. It's a threat depending on what you're into. It could be an existential threat. And the Caribbean still can work for certain asset protection structures, certain trust foundations or whatever, or holding company structures, depending on what you're trying to do. So it's not all doom and gloom, but in certain spaces, it is quite alarming and cause for concern. So what does that mean for clients? It may mean that us as advisors, you'd be looking at other jurisdictions. You're looking at, those with the opposite, with a really strong reputation and regulatory framework, like your Singapore's, being one of the best in class, and up and coming ones like Dubai. Dubai isn't quite there yet because it does struggle in some of the spaces like banking, and there may or may not be certain gray listings or whatever, but it's definitely trending in the right direction. So something to think about as we try to navigate the sometimes complex world of international tax. My name is Darren Joseph from HEJ.tax. See you next time. Thank you. Bye-bye.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.